Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla, Mullen, and Troika Media. For our first article we're going to be analyzing, we'll be discussing why a particular analyst has downgraded his overall price target for the TSLA stock price, and how this is going to reflect overall on Tesla's future trajectory, considering that analysts are becoming less than bullish on this company. And of course, I'll also give my thoughts because I am a huge Tesla fan. After that, we'll talk about how Tesla is ramping up production for their Cybertruck by issuing more requisitions for potential job positions over in Texas so they can bring in employees that will help them manufacture their Cybertruck, which is fantastic news, and this could also act as an upcoming catalyst, thus increasing and igniting the overall Tesla stock price. After that, we'll talk about how Mullen is getting ready to unveil 2 commercial trucks at an upcoming trucking event, which could send the share price upwards. And if you know me, you know that I'm not really bullish on Mullen. However, I still do report on this company because you all want me to. And of course, I'll also tell you their current price and where many investors and professionals believe the share price could be going in the future. The next article we'll be analyzing is also about Mullen, regarding how their overall management is really excited about this upcoming catalyst at this truck show, and they believe this will cause their overall share price to increase. However, there is still some risk regarding Mullen stock, regarding their less than impressive financials, which is the thing that's restricting me from investing into this company, as well as the potential of them being delisted from the NASDAQ exchange. Now, I actually don't think this will happen, and it's not one of the reasons which is preventing me from investing into this company, but the reason that will actually keep them on the exchange is the reason I wouldn't invest into this company right now. So I'll talk more about that article once we get there. After we talk about Tesla and Mullen, we're going to move on and talk about Troika Media, which is a penny stock that has a 1,000% opportunity to increase their overall share price by 1,000%. This is absolutely insane, so we'll be going over their latest short squeeze news, as well as if this company is very solid fundamentally and financially. So for more videos on electric vehicle stocks like Mullen and Tesla, or penny stocks just like Troika Media, remember to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into our first story. Tesla's TSLA shares have surged by around 54% year to date, meaning that this company is on an absolute run right now. However, recently, Wall Street analysts believe that this company is going to experience a giant pullback, which is why one of their analysts believes that the company could start dropping in price. This is one of the reasons why he recently slashed his buy rating down to a hold rating as of Wednesday. So we'll be discussing why this is. However, the analyst says, and I quote, "We downgrade our rating to hold now that our buy thesis, based on misplaced fears of a price war, appears to have been accepted by the market." He goes on to say, "We argued that Tesla can take market share at a gross margin of 25% excluding credits, which indeed is where we see investor expectations headed for 2024. So essentially he's saying that maybe he was too bullish in 2023, but in 2024 this company looks primed for growth. Right now, the TSLA stock price trades at $187 per share, while the majority of analysts believe this company could surge up to $200 by the end of 2023. I personally am more bullish on this company than most, considering that I believe as their Cybertrucks start to be mass-produced, this is going to act as a catalyst, which is going to send their overall share price further upwards. Now, another reason why this analyst believes that the company may not impress investors is because recently Tesla had their investor day, which underwhelmed the masses and many of their overall investors, because many people were anticipating that Tesla would release a cheaper, newer electric vehicle, but instead we got some minor upgrades in their overall technology, as well as Tesla announcing price cuts to further stoke demand. 2 other reasons why this analyst downgraded Tesla is he says that Tesla's valuation isn't cheap, and I actually agree with him on that point. Tesla trades at a forward price to earnings ratio of 46 times, which is over twice the PE ratio or price to earnings multiple of the S&P 500. Now, I do want to be careful here because the S&P 500 has growth stocks and value stocks mixed in with one another, which means that their overall PE ratio is going to be lower than full-blown growth stocks like Tesla. So it makes sense why Tesla is trading at a higher PE ratio than an index such as the S&P 500. The second reason why the author highlights his cutting of his overall rating for the company is because Tesla did not release or even tell investors of plans to release a $25,000 electric vehicle, or rather a cheaper Model 2 that is going to be below $30,000. However, Elon Musk has been teasing that they are working on this right now, so in my opinion, it's only a matter of time before this actually comes out. A JP Morgan analyst agrees with me, saying that investors need to have patience from Tesla and Elon Musk, and eventually this cheaper car will come out, which once it does, will send the overall share price surging upwards. Elon is a master at public relations, and he's waiting for the perfect time to release this type of information to the masses, which is going to equate to a much higher share price, so I can't wait for that. More good news regarding Tesla is that the company is ramping up their overall Cybertruck production by hiring new workers over in the Texas Gigafactory. If you go to Tesla's career page, we can see that Tesla added 26 new openings for Cybertruck-related requisitions for their Gigafactory in Texas, where 23 of these positions are specifically revolving around manufacturing. This is a clear indication that these job postings are mainly for the Cybertruck unit, which is going to be mass-produced, and I think this is extremely exciting. If you look on screen right here, you can see the various job openings that are now available over in Texas, and I hope not only will this further some people's careers and increase the overall economy in Texas, but also I'm just excited for the Cybertruck, considering that this is going to be a great catalyst for not only the company, but also the TSLA stock price. Tesla's Cybertruck is arguably one of the most highly anticipated vehicles that have yet to be released. And Elon Musk knows this, so he is setting investors' expectations realistically, especially as they start to ramp up the Cybertruck production, which will most likely start to be mass-produced in 2024. Elon Musk even said that we do expect production to start, maybe sometime this summer, but I always try to downplay the start of production because the start of production is always very slow. It increases exponentially, but it's always very slow at first. It's kind of, when does volume production actually happen? And that's next year. End quote. And that's a direct quote from Elon Musk. So next year, we're going to have a very good catalyst regarding the Cybertruck. And this year, hopefully, we can see that the TSLA share price will continuously trend upward, which I believe is very realistic, even though we're going to have short-term pullbacks, especially after minor catalysts. So overall, Tesla's TSLA shares are primed for future growth, and I am proud to be a Tesla investor. Now let's talk about a startup electric vehicle company named Mullen, which is a penny stock. They only trade for 20 cents per share, but professionals and investors believe this company could surge up to $1, which is a very important price point, which we will talk about in the next article. The reason why investors are so excited about Mullen, and the reason why Mullen is in the news today, even though I am not bullish on this company, here's a disclaimer: I don't own any Mullen stock because I believe it's too risky as of right now to invest, but if they do end up impressing me with mass production, becoming profitable, or actually delivering on their promises, then I would have no problem investing into this company, but as of right now, they haven't done any of those three things. The reason why Mullen is in the news is because they are getting ready to unveil their commercial trucks. Shareholders of Mullen have really felt the heat lately, considering that the company has lost around 9% just in the last few trading days. And I actually warned investors that this was going to happen. I believe last time I reported on this company, the share price was somewhere around 30 cents to 40 cents, but now it's around 20 cents. And I warned investors that this company was on a downward trajectory until they prove themselves. However, recently there is a catalyst for this company, considering that they recently announced that they are unveiling two commercial electric vehicle products at the upcoming NTEA Work Truck Show in Indianapolis, Indiana. And this is going to be a huge event for investors. However, the degree to which the market accepts these new electric vehicles will be determinant on how many pre-orders this company actually receives after this show, because the show could also go the other way, considering that investors and potential buyers may not even be impressed with these electric vehicles. So it's clearly a double-edged sword here, and we also have to remember, with a negative macroeconomic environment that we are in right now with high inflation and high interest rates, buying risky speculative growth stocks that are not fundamentally strong really does not work out in our favor over the short term. So I would much rather wait for this company to prove themselves before I personally invest into them. However, you always need to make sure to do your own research. The CEO and other management of this company are very excited to unveil their Class 1 electric cargo van, as well as their Class 3 low cab forward this week. Mullen's chief commercial officer said that we are excited to be at the NTEA's Work Truck Week and display the Mullen commercial product lineup to both customers and commercial vehicle upfitters that are ready to electrify their fleets. We believe the commercial market represents an excellent opportunity for our fully electric small van and our medium-duty tilt cab, end quote. The CEO even commented that the NTEA is the largest commercial truck show in North America and is a perfect platform for Mullen Commercial. He goes on to say, this show gives us the opportunity to establish the Mullen Commercial brand with two great offerings that are coming to market this year. So clearly this could act as a very good catalyst for the overall MULN share price, and this good news could spill over into a higher MULN stock price. So Mullen stock does look primed over the short term, but I would encourage investors not to be swayed by short-term catalysts, but honestly focus on the fundamentals of this overall company. That is going to take you much further as an investor. But now let's talk about some risks that a CFA, which is a chartered financial analyst, has pointed out about Mullen. And the first risk is them potentially being delisted. And I'll actually push back on him. I don't think Mullen will get delisted. However, the reason that they aren't going to get delisted is actually preventing me from investing into this company. Right now, Mullen is listed on the NASDAQ, and the NASDAQ has a policy to where stocks on the NASDAQ need to have a minimum price of $1. Clearly, right now, Mullen is a penny stock trading at 20 cents, well below that $1 price point, which means that this company could potentially be delisted. Now, the reason I don't think they're going to get delisted is because back on January 19th, the company and shareholders voted favorably on the potential for their management to authorize a reverse stock split, meaning that Mullen's management now has the opportunity, but not necessarily the obligation, to perform a 1-for-25 reverse stock split. So the reverse stock split is going to cause the overall share price to increase, even though it's not going to add to investor value. And they get to do this anytime before December of 2023. So their trump card here would be to have a reverse stock split, which will keep the stock price over a $1 share price. But if that does happen, I think this is just going to cause short sellers to beat down the stock price again, making it a penny stock once more. So I don't think this is actually going to be good news for the overall company, and normally companies don't recover very positively from a reverse stock split. So investors really need to be careful in regards to that. Also, fundamentally, this company has a load of debt. They don't have very promising pre-orders, and their production numbers are less than impressive. So overall, that's why I am not investing into this company. But again, always make sure to do your own research, because maybe you find some value in this company overall. But now let's talk about an even better penny stock, in my opinion, with the potential of Troika Media being able to short squeeze. Ticker symbol TRKA stock has a 1,000% upside opportunity, considering that Troika Media stock is primed for future growth. Now, first, let me fill you in on this company. Clearly, they are a media company, but many investors believe that this company is mispriced as a penny stock, which is why many of them are flocking to this company, potentially looking for 1,000% upside. It seems that the fair value of this company would be a TRKA share price of around $4.70. However, right now they're trading at around 10 cents per share, to where 43% of their shares are sold short. And if you don't know what that means, essentially short sellers are betting that the company's share price will continuously fall downwards. But eventually, this has to stop, and when it does, short sellers are going to have to cover their overall shorts, causing the overall share price to skyrocket. So essentially, shorts have over allocated themselves to this particular company, and if a lot of volume floods into this company, the company's share price could absolutely ignite and skyrocket upwards. However, this seems more of a short-term catalyst for this company. I don't think this is a long-term opportunity to invest into, but if you have $5 to $10 laying around, maybe this is a good risk to reward scenario, considering that the upside is far greater than the downside for this particular company. But I would love to hear your thoughts. So how did Troika Media become a penny stock in the first place? Well, it goes back to when Troika entered into a reverse merger. Essentially, Troika Media bought out Converge LLC, and Converge is generating around $300 million worth of revenue and $23 million in adjusted EBITDA per year, which was a great reverse merger for Troika to do that with Converge LLC. And the reason they did this is because they wanted to be listed listed on the NASDAQ. That's why you can buy and sell shares of Troika, ticker symbol TRKA, on the NASDAQ right now. The merger cost around $125 million, to where Troika originally issued $25 million in restricted common stock, handed over another $25 million in cash, and raised the remaining $75 million through debt from Blue Torch Capital, which is a credit investment firm. Now, here's where it gets tricky. In the worst case scenario, there is an agreement that would force Troika to issue 200 million new shares, which would radically dilute the overall share price, and that's why short sellers are piling into this company. Because if they do this, the share price will go even lower, and short sellers will make a lot of money. Because currently, Troika only has 64 million shares of outstanding common stock, and if they add that 200 million shares, it would dilute the mess out of existing shareholders. That's why shorts are piling into this company, so they want the share price to be as low as possible because they are filling their pockets with money right now. However, in the meantime, they are waiting for Blue Torch Capital to convert its Series E preferred shares. But right now, Blue Torch has not done that, meaning that Blue Torch's management might decide to absolutely snub short sellers, causing the share price to absolutely skyrocket because short sellers got too greedy. And then that could lead to a short squeeze, causing their overall share price to explode upwards by potentially 1,000%. The reason why Blue Torch hasn't acted right now is obviously converting 200 million shares at 25 cents per share is not the best thing Blue Torch could do as of right now. Another reason why short sellers could really feel the pain here, and regular retail investors such as you and I could see this company absolutely surge, is that the company's fundamentals are actually not that bad, considering that the company reported that it generated $6.4 million in operating income for the quarter in November of 2022, which is Troika's first operating profit since 2007. So clearly this is not a hyper-growth company by any means. This is going to be a short-term catalyst, which potentially gives investors the opportunity for a 1,000% return. Considering that their past 6 months, the company has brought in revenues of approximately $187.9 million, a revenue increase of 1,125%, and adjusted EBITDA of approximately $5 million on top of further and diversified revenue streams. So overall, I think this is rather positive for this overall company, even though right now short sellers are bringing this stock lower and lower, considering that right now the stock has fallen by around 41%, but at least in the short term is anticipated to surge and bounce back temporarily. So you would want to get into this company and get out with your profits intact. Literally, if you decide to risk your money on this company, which I personally am not, but if you do, make sure you get out, and if you have profits, take them off the table, cash out of that and walk away. Do not get greedy because you have the potential to get very burned. But I do want to put this penny stock on your radar, considering that the upside opportunity is absolutely insane. So with that being said, I would love to hear your thoughts on Tesla, Mullen, and Troika. Remember to go and annihilate that like button for more videos just like this one. Subscribe if you are new, and I will see you in the next YT video.